My fellow Americans and citizens of the globe, welcome back to Mickey's Corner. Today we're going to have a conversation about the markets. Let's go into the markets, the housing market, the financial markets, the gold and silver markets. Now, we spoke about this a few days ago, but I want to bring it up again. This is very important to understand, and it might help you dictate your own finances in the future on how you're going to deal with the possibility of a dollar crash. Now, there are some pretty smart people out there who will say this, and I have to agree. The dollar's going to go up first. It will go up first. I agree with that. It's going to gain momentum. There are a few articles out there right now talking about now being the time to buy dollars. Put your money in to the dollar market. And you see that because gold and silver took a little dip today and yesterday. And I think that's because the consumer confidence level is on the rise. They see the rising markets. They see the rising real estate that is currently in place. The housing market is on the rise, and they feel confidence. I believe, do not let yourself be fooled. Something that you need to be very wary of right now is the strength of the dollar. The smart money, the smart investors that are away from Wall Street, they're away from the printing presses of the Federal Reserve, are all hedging their bets right now on a global scale. Whether they're right or wrong, only the future can tell. But smart money right now seems to be, and not only gold and silver, but gold and silver mining, buying into, through stocks and bonds, into the gold and silver mining market. And it seems like right now that is going to be a safe bet against a market crash. If the market crashes and you have a lot of money tied up in the market, you're going to lose out big time. So, as with the days of old, okay, the greatest generation, a lot of that generation, as they aged, went into what is known as municipalities. They went into water, electric, utilities. They stuck with stocks based on everyday needs because it was extremely stable and it had small growth, but everybody needs water. Everybody needs electricity. So they took a large amount of their money, and as a mom and pop operation, not as a corporation, they invested their money into utilities, things that people need on a daily basis. That was their hedge of protection in the early 70s when we went off the gold standard in 1971. And money became a credit in which the dollar bill no longer represented a backing of a currency of any type. It's just printed on paper. So there is wisdom to be learned from the people of, the greatest generation, because they came out of the Second World War. The Second World War was the introduction of income-based taxation. It was supposed to be temporary, but it became permanent. And a lot of these people coming out of the wars decided to utilize their assets, get stable long-term careers, and invest in the market in things that were considered staples. It's not a big boom. You're not going to make the big money. But in the long, like the turtle in the hare, in the long race, you come out the winner at the end. Now, there are a lot of us out here including myself, who missed the boat on a lot of opportunities of the 90s, even though it was tough at that time. Economically speaking, it was a little better than it is right now, but there's a lot of catching up to do. So you may have to do a little bit of a riskier investment in the market, like on penny stocks, where you see penny stocks fluctuate sometimes from $1 to $4 a share in a day. So you could potentially quadruple your money. Day trading, penny stock trading, just as a supplemental. But that cannot be your bread and butter. You got to have a long-term strategy as well. Where does that lead us? That leads us into the future of the United States dollar, the stock market, and everything associated with the United States dollar. So let's take a look and see what we've come up with, okay? The eviction moratorium expired about a week ago. So this has to do with renters, and it also has to do with mortgages. So a little more than a week ago, nearly 4 months after the U.S. economy effectively shut down to the COVID pandemic, 33% of renters have yet to make their full payment in July. 12 million renters could be on the cusp of eviction in a matter of months. Landlords are set to lose billions of dollars this year over the inability of tenants to pay rent. Now think of the consequences about that for a moment. If you look into the real estate market, just because you as a renter aren't paying your rent doesn't mean that the people who own the building are getting that break. So the landlords themselves, no matter how you feel about rent and landlords and everything else, they're also held accountable to the banks. So what does that mean? Well, the exact cause of the landlord-tenant dispute turned violent in Georgia on Sunday. There is yet to have an underlying cause. One can assume it had to be due to payments. I agree with that 100%. You know exactly what that is. Someone didn't pay their rent. The landlord in desperation tried to collect, and it became violent. This is something we're going to see more and more of because the moratorium on the CARES Act is over at the end of July. As of July 31st, every benefit provided by the CARES Act is finished, at least until Congress can put together another stimulus bill. So they are currently working on a stimulus bill. How soon might we actually see? Now, this is something, please pay careful attention to this, okay? The original CARES Act was passed in the Senate on March 25th. It went through pretty quickly. Passed by the House March 26th, Senate March 25th, signed March 27th. The first checks went out April 15th. That was pretty quick, considering the government never gets in a hurry to do anything. But carefully look, okay? And you'll notice this time around, there's a lot of pork in the bill. There's a lot of bickering in the bill. So it's not going to be a quick process because the next thing, the HEALS Act, that's the name of it, the HEALS Act. Keep that in mind for the future, okay? The proposal date is July 27th, was just passed. They began negotiating on that July 27th, and they have 7 to 9 days to actually get some kind of proposal put in place. So August 7th is approximately when the negotiating period will end. If the Senate passes, it could be as early as August 6th. But according to this, it could take as long as September 8th. So they're going to, in case they want to take it into the Senate and argue the point. And if the House passes, same thing, August 7th and as late as September 9th. If everything goes quickly, The President of the United States could sign it on August 10th, at which point first checks could be starting to be put out to the people August 24th. So they're still debating on how much and what's going to be in the bill. And there's a lot of funding of a lot of different pet projects in there that they have to fight over. Okay? But look at this. September 28th potentially could be the date they actually start signing checks and sending them out. As of July 27th, that's 2 months out. So if the CARES Act ended July 31st and 33% of the people can't pay their rent, they may have to wait 2 months before they ever see any relief. They're already late on their payments. The housing market right now in the rental area is critical. People can't pay their rent. Yet, let's look. See, this is what I wanted to point out to you. The latest housing market trend shows that prices are rising in most parts of the country. Why? Okay, I'll tell you why. Because two things. It's a safe haven like utilities. It's been traditional that the housing market has always been safe, and a lot of people are trying to find a place to put their money safely. It's driving up the cost, yet commercial real estate is on the decline. Commercial space is decimated right now. Dunkin' Donuts is going out. They are closing 1,500 stores. Pizza Hut, they're laying off, they're shutting down. They're not moving product. They're going to keep their flagship stores still open, I'm sure. But the areas where they don't generate quite as much income, they're out. That's how Sears started, remember? They're saying the housing market is on the rise, but it's not a bubble. Well, what's the consequences? Because a lot of people are getting into the housing market as protection. Maybe some of those people are renters. Well, here's the other side of this, okay? Mortgage forbearance. So this is something you need to be aware of because they're having the same problem right now. No matter what they say, they're having the same problem right now in real estate, in the housing market. Mortgage forbearance. Let's take a look. It's nice and highlighted for everybody to read. The CARES Act provides many homeowners with the right to have all mortgage payments completely paused for a period of time. Forbearance does not mean your payments are forgiven or erased. You're still going to have to make those payments just in the future. So they also, now, homeowners who have mortgages that are $1,500, $1,800, $2,500, $3,500 a month mortgage payments, they're not getting an erased payment. It's just put off for a few months. Maybe that's why the real estate market is booming, because a lot of people have already gone into foreclosure. Investors with that have a lot of liquid cash available are trying to get into that market. They're snatching up all the foreclosures. There have been a large increase of eviction notices filed with the court. What if I told you that the U.S. housing is one of the best money-making opportunities today? And it's absolutely booming, just like the stock market. Well, let's take a look at how people feel about the stock market. Stocks hug the bullish trend. The name of the article is Insanely Stupid to Chase Stocks as Economy Plunges. Okay? Which all ties back to the gold and silver. Right now, gold and silver are on a run. They had a little bit of a dip, but don't let that fool you. Gold and silver are going to go back up. Gold right now is hovering around $1,900 an ounce. It's not going to slow down. What does that mean? The GDP crash. On Friday, we got, this is big, okay? Another point to really focus on here. This is going to be what drives our economy. The GDP crash. Okay, so gross domestic product for second quarter. And we knew it was coming. You can't hide those numbers. 38% decline. in gross domestic product for second quarter. There it is, right there. We're not making stuff. People aren't buying stuff. Everybody's holding on to their cash. Everybody's holding on to real estate, gold and silver, and the stock market because they see the potential. COVID-19 crisis led to a debt surge to new highs. Now you know how everybody's paying for it. Debt. So, be careful, people out there. Right now, the stability of the markets is very questionable. Gold and silver is very questionable. But you need to hedge your bets somewhere. Buy a farm. Plant a garden. It's smart money. I put a garden in and it's become successful. It was a learning curve, you know, as with everything else. I am not a green thumb, but we made it work. And now my grocery expenditures have gone down tremendously. Have you seen the price of produce lately? Wow. Huh? A cucumber's $1, and when you look at it, it looks all shriveled up and gross. Ugh. $1 a tomato. And we're not even talking like Whole Foods prices here. We're talking Walmart prices. Have you been to Lowe's or Home Depot recently? Have you seen the price of material? Inflation's coming. I wanted to take the time once again to thank everyone for coming here today and hearing my rant. And please stay tuned for more information coming in the future. I really appreciate everybody that comes here and watches my show. Stay safe and have a sweet day. Hey guys, don't forget, check out the videos over there, and like and subscribe. Don't forget the notifications, and let me help this channel grow. I appreciate everybody that came by.